Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have Pump Fun overtaking Hyperliquid in 24-hour revenue. Token is rising 12% to around 4.2 billion. We will discuss. We've got Mike Novogratz's Galaxy tokenizing its shares on Solana. Pretty epic for stock tokenization and pretty epic for Solana. We'll discuss there too. And Trump's oldest son's American Bitcoin stake is now worth over $1.5 billion as the shares rise around 17% on its NASDAQ debut. We will talk in that direction too. We've also got the latest on price action on crypto and NFTs as usual, and where we think attention is flowing. So stay tuned for that. And today, we do have a special conversation with the founder of Gigaverse, Dith. It is, of course, Gigaverse Week, which we are delighted to be supporting on. So looking forward to that conversation towards the end of the show. It should be around 7:45 a.m. Eastern time. In the meantime, though, we've got the usual show for you. You've got Legendary in the co-host seat with me. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky, and we do not know anything for sure. So please proceed with caution and always exercise your own judgment. With that out of the way, Legendary, it's Thursday. It's the 4th of September. How are you doing? How are you feeling?
I'm doing quite well. I realized I spent almost the entire morning ripping Pokemon cards on Fidgetals and had quite a lot of fun doing that. And volume is adding up on that pretty quickly, which surprised me to see that basically with this morning session alone, I got into the top 10 of like all-time points. But it is entertaining. It feels like we're really hyper gamblifying everything.
Okay, couple questions on this card situation. Number one, is it... Are we like exit liquidity here at the moment? It seems like the whole space has just been completely got the mind. I won't call it a mind virus because I think the collecting cards is cool, but like it does feel like we're just jumping from one thing to another at the moment, and the kind of mind share is very, very fleeting. Maybe Brad would call it ephemeral. Is that happening? And then two, is there potential double play here, Legendary, with, okay, you know, you get some volume, you maybe get some cards, maybe you're profitable, but are these points going to turn into airdrops across different platforms?
I mean,
What's your
that's
thought there?
the thinking, right? That is what happened with Collector Crypt. That is what I'm expecting to see here as well. So it is obviously an airdrop play as well. I wouldn't say that we're like jumping from trend to trend super quickly. I mean, definitely Meta feels like it is accelerating. But what I also think is really happening is that we're just seeing more things happening at the same time and more like different pockets of interest doing their things at the same time. And it feels like that, if anything, because we are covering everything that is going on, like from the RWA side to the Pokemon cards, to the more serious stuff, to the creator coins, to Hyperliquid, that we are like jumping across these different pockets of CT and do multiple things at the same time.
Okay. I think that is fair. We definitely do kind of span a variety of topics. Because I was thinking about this earlier, like we're getting quite involved on the consumer side. And I can't remember a time, you know how Web3 gaming, for example, has been, people have been incredibly bearish on Web3 gaming for quite some time in general. But now, if you think about it, including, you know, we're talking Gigaverse today, a little bit later with Dith, but there are other really profitable games on Abstract. And so, like, I think, look, maybe some of it's better games, good dynamics, potential airdrop speculation as well. Like, that's always a little bit a part of it in crypto. But you're just seeing a little bit of hope from the on the consumer side. And I'm definitely seeing that centered on Abstract for like those specific kind of games. And obviously on the consumer side, Base and Solana are doing very, very well too. So I was speaking more maybe from the gaming side, that Abstract seems to be finding some product market fit. But yeah, as you say, we're like deep in Hyperliquid, deep in liquidity providing. Some of the conversations in the Telegram the last few days have been super helpful. I think like high quality conversation, figuring out how we want to do things there. So I feel like those things are the slightly more enduring plays. It's like, you know, we're going to be doing this the next few months, whereas some of these other things you're jumping in and out of a little bit more. Is that how you feel, or any other further reflections there?
Oh yeah, absolutely. Yeah, that's like basically using the idle capital to work on something real quick. It's kind of like we did it with Plasma as well, right? I mean, Plasma was ultimately a 2-minute thing. You deploy your stablecoins, you wait for the token to come, which will be soon, and then we'll decide if there's stuff to do on the blockchain or not. And I feel like it's the same with some of the airdrop plays, whereas with others, we've been locking up a ton of capital on Hyperliquid, obviously for a way longer period of time. Yeah.
Yeah, indeed.
Different time horizons with different plays.
For sure. Okay, that is good. Good stuff. Final question before we get into the main stuff today. Are you feeling that you want to, because I mean, we had a bit of a portfolio conversation yesterday, like, okay, here's where we're kind of thinking of readjusting. Maybe stablecoins have gone a little bit higher, wanting to deploy or reallocate in certain directions. Are you feeling like your finger is close to the button, like a lot, like pressing a lot of buttons, or is it more like 3 to 6 month plays? How are you thinking about that?
No, it's definitely more button pressing that's happening since I'm back. Maybe it's like me catching up from the holiday, but it's
You've
a lot
just
of
got a deficit of buttons to click.
yeah, I need to catch up for 3 weeks of not clicking any buttons, basically.
Okay, maybe that's just
I would say there's an honest answer. There's more stuff to do.
yeah. Okay. So a little bit of legendary deficit button clicking and a little bit of more things to like this Pokemon stuff going on. Definitely wasn't as prominent the last couple of weeks, although maybe the start of it started to emerge. So, okay, we will discuss all those things in a bit more detail in a bit, but we've got a big show today, some interesting stuff to discuss. So let's start as usual with the price action to get you up to speed with everything that you need to know in the market, starting as always with the price of a Bitcoin, which is flat at just under 111K. I think it went up to as high as 112, just sold off a touch this morning. ETH is up a percent to 4.4. XRP is at $2.85. BNB is flat at 849. Solana is down a percent to 207. Hyperliquid is flat at almost $46, and Sui is flat around $3.33. So most stuff pretty flat there on that side. However, on the meme coin side, things are actually a touch red from what I can see. Things are Pepe's down a couple of percent, Pengu's down 4%, Bonk's down 3%, SPX is more or less flat, WIF's down a percent, Fartcoin's down 5%, back to 76 cents. Rect is actually up 6%. Maybe Rect up 6% on the news that there was that $2 million Rect treasury investment from a fund that we're going to be holding Rect. Potentially just other stuff. It does seem to be going against the rest of the trend of memes or like more speculative tokens today. The other big one that's moved in a big way against the tide is Troll, up 15%, back to 190 mil market cap, because the announcement there was that they've bought the rights to the original troll face meme. So they now own the original. People consider the troll face meme like one of the more original memes in the space, up there with Pepe, up there with Doge, and they bought the rights to it. So the market seems to like that a lot. Ledge, any thoughts on meme coins going out and buying the rights of the memes?
Yeah, I mean, you gotta do what you gotta do to stay somehow relevant as a meme coin. And if out of all the things that you could do, that seems like a more reasonable thing as opposed to trying to get your name on a stadium or the other things we've seen so far.
It's kind of funny though, isn't it? Like on some level, the whole point of the meme, I'm trying to think if this is accurate or not. The whole point, I'm just thinking out loud. The whole point of the meme is that it's kind of worthless and that it's poking fun at something. It's like a play on attention, like pure attention. Although I guess part of what Web3 is good for is like verification and authenticity, which is where NFTs usually came in, where it's like, okay, you specifically own this thing, it is provable, you are the true holder, this was the authentic version created by that specific artist. So there's an element here of like, well, other people bought it, but it's quite a Web2 way of acquiring something, right? Because it's not created by the person, so there's no authenticity in that way. You gain the authenticity by just taking your money and going and buying it. So yeah, I don't know.
I mean, we kind of seen it with Chilga, what happens if you don't have the rights.
Yes.
And the
Yeah.
artist comes out and is like, no, I don't want any of this. So maybe it's like also just like risk mitigation, avoid future litigation, just get the rights and avoid any future drama. It's like from a lawyer perspective, there's actually something you should like when this is happening.
Yeah, I agree. Actually, like the person whoever created the troll thing, yeah, like that's your creation, right? So yeah, good. Maybe a win all round. The meme gets to have the rights. Now they can continue without stress, and the people liked it. The market liked it, and whoever sold it to them gets a humongous payday. My bet is so. Good for them. Getting into the rest of the roundup to get you up to speed, we have Pump Fun overtaking Hyperliquid in 24-hour revenue. Token rises 12% to 4.2 billion. We'll discuss that in a moment. We've got Mike Novogratz's Galaxy tokenizing its shares on Solana. That's pretty big news too. And you've got Trump's oldest son's American Bitcoin company stake worth more than $1.5 billion as shares rise around 17% to $8 on NASDAQ debut. We'll get into all of those headlines as usual in a bit. Some notable other price action. You had a new wallet sweeping $2.1 million of CryptoPunks yesterday, sending the floor back up to 48 ETH. You had World Liberty Fi tumbling another 20% down to $18 billion FDV. And you also had, what was it? This card coin, Collector Crypt. You had Collector Crypt up another 45% yesterday. So Collector Crypt went up 45% to 435 mil FDV. This was, like 50% lower 24 hours ago, which had already done like a 3x on where it was not long ago. So this Pokemon craze and card collecting RWA craze is very real. Ledge, coming to you for a second here. Thoughts on, is it just cards that are going to be influential here? Is this going to be something meaningful to consider, whether it's other things tokenized on chain? Put stocks aside for a second, right? This is more like physical goods being tokenized on chain. What do you think?
I mean, it's actually a pretty nice model, right? If you think about the traditional art world and you think about the free ports where you can buy expensive art, hold it in free ports, it's in the status of perpetual transit, you don't pay any import taxes or import duties for doing that. You kind of have a similar effect with those platforms. If you think about the perspective that if I were to buy cards and import them physically in Europe, I would have to pay in my country, that is 20% value added tax on that. And everything, like if I want to collect Pokemon cards physically, it's a pain in the ass to do it out of Europe because the market is in America and because I have those import duties. Now, if I collect digitally, that suddenly is not an issue anymore. If I look at a platform where I can access eBay, like Fidgetals used to offer, and buy a card on eBay and have it directly shipped and vaulted to the company, I never need to deal with like physically importing the card in Europe. So it's actually solving a problem. Now, the thing with Pokemon is obviously with its 30th anniversary coming up and the tremendous popularity that the brand has always been having, it is just the easiest way to get people to collect on your RWA collectible card platform. You use the gacha, whatever, just use the most popular brand. Obviously, all of the big brands or all of the big companies, where it's like Collector Crypt, Courtyard, Fidgetals, Breezy, a ton of the volume goes into Pokemon cards because it's just the easiest brand to promote. I don't think it's only going to be cards. I think it's going to be other collectibles as well. I mean, Courtyard has extended the offering, yes, to more cards, but also like to sports cards, that is. But everything that needs to be stored or shipped or delivered and someone else takes the burden of doing that. We've seen watches as well. I don't remember the name of the platform that did the same during the last season. You could like rip 50K packs or 80K packs for watches as well, and which sounds quite absurd probably to people outside of this space. But you could also have the watches stored with them and basically traded via the platform. So it is actually a meaningful convenience factor that is being added to collectibles that makes your life easier. Because like even with my cards, I told you I bought the shadowless stuff before my holiday. I bought some more stuff. I don't keep that shit at home. I take it to a physical vault outside of my space because I just don't want to have like physical gold Pokemon cards and make myself an attractive target to want to break into my place for those reasons. And what's way easier than that is if I just have the NFT, the digital collectible, I never need to worry about the vaulting cost because I'm paying a fair amount of money to have physical vaults where I store my shit.
Yes, I think that is fair. Interesting. Okay, so I wanted to share this when you talked about other types of RWAs as well. The interesting thing to me is that this stuff's not new. Like this stuff's been around for a while. It's just people are suddenly getting excited about it today. Mike Dudas, prominent VC, shared this on a different RWA platform. So he said, so you're saying people started looking at the underlying assets backing coins they buy, profits, Pokemon cards, and started to look down the market cap table, and they discovered Drinks DAO, a tokenized spirit DAO with me and Web4 as the whale champions of taste. So this, I believe, is like a whiskey brand where you're kind of owning the barrels of yeah, you kind of got ownership of these barrels, I believe. I'm pretty sure it's whiskey. Although I guess in essence it could be anything, right? It could be whiskey, it could be wine, it could be all these types of things. So just having a quick look here, clicking on view the assets. I know these are okay, maybe it's other things as well.
Nice.
Yeah, this looks like whiskey to me. Interesting. So okay. I'm not sure that I think the thing that's happening at the moment, just to put a caveat on this before we hit the rest of the news, the thing that's happening at the moment is people getting like hyper excited about revenue and like real world businesses and real world stuff. But you're going to actually need to check how much revenue people are making. So that's my only caveat. Like there are definitely entities in this space that are good businesses that are doing a good job, but that doesn't necessarily mean, I think what happens in this industry is people see like a meme go to 700 million FDV, be like, oh, that's what's good. A meme is good if it goes to 1 billion. Therefore, if the company is good and it sells Pokemon cards, which are also good, then should we send that token to 1 billion? It's like, no, not not if not if your model is also thinking, okay, we need to be leaning on this company's revenue. That's why it's important, because then the revenue is relevant, especially if you're thinking in terms of buybacks, which is why half of the other, well, Hype and Pump are doing so well, is because they're making so damn much that they can put that revenue into the token.
Mm-hmm.
That's how you get an expensive valuation. But I think there's just a little bit of like disconnect between, okay, this company is good, it makes money there, and it's dealing in something which I like, which is Pokemon cards. It's like, okay, well, let's send this to 700, 800, 900, $1 billion valuation. It's like, that's not necessarily the case. That's just like one caveat in my thinking. Curious for your thoughts, Ledge, before we move on.
Yeah, I very much agree with that. It makes it difficult to value stuff in our industry because these things happen like next to one another, right? You have this revenue generating business that's valued at this amount of money, then you have the mimetic stuff, and then you have like maybe the intersection sometimes where you have like a revenue generating business and the card has a great token and it's a fun platform to use, but that valuation isn't based on the revenue. Like, let's be serious. This is not a $500 million company based on its revenue. It's based on the ticket it's based on attention, it's based on tokenomics. So there's like so much more that goes into that. It makes it difficult to like appreciate the platform coming out and doing a couple million in volume every week and making maybe 50K a week, or maybe making 100K a week in fees, and making like $500,000 or $250,000 a month, a couple mil a year, which is like pretty impressive for a startup to come out and be like profitable. But it will not get the same level of appreciation versus the meme coins, which just go up in value and display a high number. And I feel like a lot of that has to do that the attention span in our industry is so short, and we're like focused on one single number. Like we could see that yesterday on Thread Guy, where he had the Collector Crypt CEO on, who said like, open a $50 pack, get $55 worth of cards. It's EV positive 10%. And then people are like, oh, this is an infinite money glitch. This is a grift. This is a scam. And nobody's like reading the second line. They buy the cards back at 85% of the FMV, of the fair market value. So basically, you open a $50 pack, pull a $55 card, they buy it back at $47 because nobody wants to like the trash cards. Everyone's like hunting grails. And they sell you the same card, which they bought for $47 again for $50. So yes, in theory, you get a higher value card, but they're not buying it back for that value. So of course, it's not an infinite money glitch. And it's a business model where they're making money with that. But that takes too much attention to explain, and already loses like the majority of the audience.
Hope we didn't lose our audience as you gave the crucial explanation there. Okay, good conversation to have. It's definitely something that's getting a bit hot, so I wanted to touch on that. I think I might have a play around some of the platforms. I definitely don't have an edge there, so maybe I won't. I don't know. I'm going to try and English saying, please let this be the Pokemon top. If I get involved, it probably is, because I've never done anything in this arena ever. So I'll let you know when I do.
Yeah, I'm gonna sell. You started getting excited about like having a Charizard. I'm gonna sell.
Yeah, that's the way to do it, I think. All right, rest of the roundup before we hit the headlines. We've got Coinbase announcing upcoming launch of Mag7 crypto equity index. That's pretty cool. A bit of a mix between crypto and traditional stocks. CFTC approves Polymarket to access US with its prediction market. I think that's also pretty big news. So Polymarket can access US markets properly. Etherealize announced $40 million round to accelerate their institutional business and rewire Wall Street towards Ethereum. Also big news for Ethereum, Etherealize being their like kind of formal city marketing arm to get Wall Street to use ETH. Mochaverse announces Mocha and NFT stakers can stake their assets to manage and own a portfolio of $20 million worth of tokens. That is an interesting idea. It sounds a little bit like a DAO to me. And I'm not sure how group ownership and group management of assets works particularly well, though I have to say I haven't not read the specifics there. We wanted to bring that to your attention. AlphaTon Capital announces initial financing to acquire $100 million of TON tokens to start the corporate treasury. That's, of course, for the Telegram token. Last few bits of news. Troll Meme Coin announces acquisition of IP rights to the original Trollface meme. We mentioned that. Gigaverse, partner of today's show and partner of ours this week, announced $2 million raise led by prominent fund One Confirmation to build the largest and most enjoyed crypto game. Disclosures there. Legendary and myself are investors. ETH L2 Linear token eligibility checker is live for TG of September 10. I've heard a lot of people were disappointed, thought they did something there, got absolutely zero, but that's just anecdotal. And then finally, blast from the past, legendary Pixel Vault taken over by original comic artist Chris Weil and writer Josh Blaylock after what appears to be the former owner G-Funk just disappearing to some extent. Is it with crime? Is it not with crime? Just in complete silence, disappearing in the night. But it looks like Pixel Vault will live on. OG NFT project back in 2021, where me and Legendary actually met because of that project. We were in the same Discord, and that's how we met. So the project lives on. Legendary, what do you think about that?
Yeah, I'm sad that it's not Beanie taking over. I think it would just have had better chances under him, to be honest. I wish the team, taking it over and working it all the best, but I would have loved to see a Beanie come back on that. Ultimately, that would be so much more juicy for the entire timeline and so much more fun to observe.
It definitely would have been juicy. Beanie obviously being somewhat controversial in general.
But he has redeemed his reputation by, you know, coming for G-Funk like for the last couple of years and attacking him like day after day after day. And now, you know, Beanie's here, G-Funk is not.
Yeah, this game is one of attrition. Crypto Twitter is just got to survive. If you're here in 4 years' time, just well done. You've survived.
Yep.
You haven't scammed anyone, and you've done a good job. So congrats. Okay, we have a couple interesting headlines to get into, but before we get there, just want to shout out to say we're excited to announce today's show is sponsored by crypto game Gigaverse. Gigaverse has found PMF on Abstract, and they have some huge announcements this week on which we're delighted to support. The second announcement today is about their $2 million raise led by prominent fund One Confirmation. Gigaverse has, these numbers are crazy, 75,000 paying players, $4.5 million in revenue, and $9 million in peer-to-peer trading in just the first 6 months of operations. And we'll dive in further later in the show, and we're delighted to be joined by founder Dith to hear more about the Gigaverse story, why building a crypto game is so compelling to him. So we look forward to having that conversation a little bit later today. First headline then, legendary, Pump Fund overtaking Hyperliquid in 24-hour revenue. The first thing we need to know here is that in the last 24 hours, Pump did around 2.55 mil in revenue, obviously behind Tether and Circle, who are usually at the top here. Tether at 21, absolutely insane. Tether at 21 mil, Circle at 7 mil, and Hyperliquid at 2.2. So Hyperliquid traditionally has always been above Pump, so a little bit of a shift there. In terms of the actual price action on Pump, you can see we're at around 4.2 on the 7 days. This has been a beautiful trade. Remember, Bread was speaking about this earlier this week and last week. So I think he put on this trade in the middle. I put it on a bit late. I got in at maybe 0.37, just saw like a 12, 15-ish% rise. I've actually sold here because I think it might dip a bit lower, but I kind of want to be in this trade again. This is not like a serious trade. I'm doing it as a bit of fun. I kind of want to be in this trade from a little bit lower. I don't know if I'll get a better price, but I do think this goes higher kind of for longer. Like we're back at the ICO price, right? At 4 bill. This is the amount where tons of investors came in a public way. They all unlocked straight away, which meant obviously that there was way too much supply or way too many people who are up quickly. And so I think over, what is it, the last month, how long has this token even been out? Is it 1 month or 3 months, or feels like forever, but maybe it's July. So mid-July, August, September. So it's barely been 2 months, basically. It's crazy. So if you're looking at the chart from the start, starting out at like above 6 bill, capitulating down to 2 something, now just getting back to like parity. I don't see a lot of downside here. It feels like, and so this is, maybe I subscribe to the same thinking as Mike Dudas, who's a significant investor in general, but also made the good call and made the pump fund trade, made the pump fund investment before all of the success. He said the thesis is the same as when you bought 1.32 billion in their public and private sales 6 weeks ago at today's price, except now every major assumption has been de-risked. This is the thinking from his perspective. Buybacks, they showed they are willing to buy back Pump with 100% of its revenue. Fundamentals, revenue and market share are massively higher than when the sale occurred. Remember when the sale occurred, Bonk was really knocking on the door. People were talking about Bonk as if it was going to overtake Pump, as if it was going to steal all of its market share. Community creators are loving them. He says $2.4 million in creator fees on day one. They've obviously started ramping up this creator side of things. They mentioned in their raise documents and content that they want to kill like TikTok and Twitch and all of these things. Like they want to be the place where people stream. So I think these are fairly compelling reasons for why the downside is probably capped, so long as the rest of the market plays ball. I think that's, to be fair, maybe that's part of the reason why it's struggled a little bit. Like the rest of the market has also struggled in that period of time. Bitcoin is refusing to go much higher. Sol has also not been that strong, although obviously recently it's kind of popped up again. So I think if the market stays fine, it's not going to outperform the market if the rest of the market nukes. But if the rest of the market does well, I think you've got a really nice chance here to go like plus 50% or something back to 6 in that region at least, given Hyperliquid's valuation, which is so much higher. And they're doing the same revenue, more or less, back to back. So, Legendary, curious for your thought there. Conscious we've only got about 8 or 10 minutes or so before we got Dith joining us. We've got a couple more to get into, but what's your thought here on the pump rise?
Maybe I'm just going to answer it from my own portfolio perspective. Did the pre-sale, did sell, did trade a bit after that, did buy in, set it up on Hyperliquid, obviously, as U-pump, as unit pump, that is, on Project X, as a one-sided liquidity pool that was out of range because I had like the 4 bill as the minimum price, and now it's going back into range, and I'm slowly starting to DCA out of that position as it will go up, and farming a couple airdrops along the way with that. So it's a nice overall trade.
I like it. That's an interesting way to think about it. So now you just DCA. What's the pair? Is it Hyperliquid or is it Hype?
Yeah.
Okay, so as pump outperforms Hype,
I'm accumulating more hype.
Yeah. You'll accumulate more hype. Okay, interesting. Interesting way to think about it. And obviously, you're potentially farming a few things there. You're farming hype, potentially you're farming Project X. You're farming unit because you pump as a unit asset. Potentially, we don't know these things for sure. And you're earning fees on it now. So interesting way to think about it. I think if I do it, I'm just going to do a clean trade. I'm going to try and sneak in a little bit lower, but I wouldn't be too afraid of buying here either, personally, if the market's looking strong, because I think 5 to 6 is programmed, in my humble opinion. Could always be wrong. Let's get to the second headline for the day. What do we need to know about Galaxy tokenizing its shares on Solana? I think that's pretty big news for tokenization of stocks and pretty big news for Solana. What do you think?
That is absolutely massive news. And that is because it is essentially the first NASDAQ company to have natively issued SEC registers equity on the blockchain, on Solana specifically. And I think yesterday we spoke about the fact that we have Bloomberg interviews where people speak about how the Hyperliquid emergency fund works and explain the world of blockchain. We had the news in the Roundup with the X stocks to add 100 more tickers. But this, again, is completely different because it is natively issued by a public company. It's not like some third party buying a bunch of stocks, putting a token wrap on them, bringing them on chain. Then you have to trust them for the redemption of the underlying asset. It is done directly by the company, and it's beautiful that someone is setting a precedent on how to do that. Just some more info on that. So it is the Class A common stock, which is tokenized, as I said, on Solana. It's done through a partnership with Superstate. It is fully SEC registered. It has equity rights as well. You can also transfer those shares as well. So that is very, very strong, because when we spoke about the OpenAI, obviously not a publicly traded company, but like OpenAI equity or private shares being tokenized, and the company immediately spoke up like, nope, it's nothing to do with us. You're not having equity in the company. We're purchasing this. So this is a completely different vehicle, and that makes it very, very relevant. And I think it will be interesting to see if other companies follow with a similar model, which I expect to be. It's obviously something that's closer to companies which are already, obviously Galaxy Digital is a company that's operating in the world of crypto. So it's something that's more likely to see coming from these companies first. But it's, again, removing this barrier between like DeFi, TradFi, between the Web3 and Web2 world. And I need to highlight it once more, it is done natively. It's done by the company. It's not done like through a third-party offering. SEC says it has equity rights, and that is massive, massive news.
That is really big. My key question for this, in order for adoption to take place and for things to really get moving, is you said it's done via Superstate. Is that, I think that was the right name. I don't know. Is Superstate like a new platform? The thing that needs to happen in order for this, so it's I think on the one hand, it's cool that people are getting it on chain natively. I think that's cool. But I guess the benefit of having a provider is that maybe they put it all in one place. And so there's two issues for me, or two clarifications, which I guess we need to look into. Maybe you know the answer. Is one, is this when people do this natively, when company by company do this natively, are they all going to go onto Superstate, or are they all going to go into Superstate and they're going to be available elsewhere? And then the adjacent question is, if they are available everywhere, does that mean you do or do not need to KYC to buy the stuff? I think this is the one big question, and it's actually the question that hangs over Hyperliquid's potential for this as well, as Unit is potentially going to be working on the tokenization of stocks. How are you supposed to do that properly with no KYC? Like you can't do that as far as I know. So what's the solution there? I know Xstocks is doing it now, and I guess you don't need to KYC. So this is just the question up in the air for me, Ledge. I don't know if you have a view.
Yeah. My thinking, I'm just sharing the Superstate website so we can take a look at that in the meantime while I'm speaking, because they have some other interesting products as well. So they are basically enabling different short duration US government securities funds, Superstate crypto carry fund. They're enabling like transfer products to come on the blockchain. But from my understanding, it's then a token that you can trade on the DEXs, and I assume it will follow a similar path as many other RWAs. You can buy it, you can transfer it. Was the same with the Coinbase stock that I bought on chain. But the moment I want to redeem it, like for physical shares that I hold in my brokerage account, I will have to KYC. The moment I want to redeem my Pokemon cards for physical ones, I will obviously have to KYC as well, because they need my address. The extension here would be, this is me speculating, if I have shares that are natively issued and I want to vote, I would assume I would have to KYC as well. So I think like holding, transferring around is fine to do in a decentralized way. But if you want to exercise like ownership rights or actually get them as like quote unquote physical stocks in your brokerage account, my assumption is that there's no way that you can get around KYC for that.
Okay. Makes sense. I think that makes sense. We'll monitor that. I do think there needs to be like a platform that houses the majority, or maybe a few platforms that become the main places to do this stuff, in order to really drive volume and make it easy for people to switch between these things. You saw, tying this together with one of the other pieces of news, Coinbase offering this kind of index of crypto mixed with Mag 7. I think that's what people will want to be able to do in future. They're going to want to be able to sell ETH and go straight into Tesla and borrow against their Tesla in order to buy some more pump, or like something like this would be a super cool solution in the not too distant future. Okay, just a reminder, guys, we've got the founder of Gigaverse, Dith, joining us in just a moment. Before we get there, Ledge, we've got one final headline to touch on. I think we just need the core information here on what the Trump children are up to with American Bitcoin.
Yeah, absolutely. Let's keep it short so we have enough time for the other parts of the show. And it's to do with Trump's oldest son's American Bitcoin company. It saw its stock debut worth $1.5 billion. It's Donald Trump Jr. and Eric Trump, who own about 20% of this Bitcoin mining company. And the Bitcoin, the American Bitcoin Corp soared as high as $14.50 in its first day of trading. Currently trading at $8, so it definitely did see a peak. It's down another 9% in the pre-market at $7.30. But it's yet another venture in crypto of the Trump family. And I'm going to be curious, and definitely not going to do this on this show, but we'll have to do one of the shows to like do a full breakdown of all of the like crypto companies and involvement and media angles and DeFi angles and everything else that they are doing. And obviously the meme coin side of things, and try to put a cumulative value on that to see how much they've been making with the crypto focus.
We need a dashboard.
Yeah.
We need a dashboard. Like in the Telegram, we have our best information sources section. We've got like we've got the best analytics platforms we use. We've got the dashboards that we like to look at. We need a Trump. We've got the treasury company dashboard of like analyzing how the NAV of all of these treasury companies. I think what we need next is the Trump family's wins so far in their during their presidency. I think that'd be kind of interesting to see. But look, guys, that is at least the headline portion of the show today. We're delighted to say that we have the founder of Gigaverse with us today. We've got Dith joining us on the show. Gigaverse is the crypto game with 75,000 paying players, $4.5 million in revenue, and $9 million in peer-to-peer trading in just the first 6 months of operations. It is one of the most fun crypto games finding product market fit on Abstract. Dith, welcome to the stage, my man. It's great to have you back with us again. How are you doing?
Hey boys, good to see you. And yeah, great to be back.
Great to have you with us, man. Really excited to have this conversation with you today, Dith. You had your big announcement yesterday, some of the data we were just kind of quoting from. How did it feel? First and foremost, before we get into the main stuff, how did it feel to get that information out there? I'm sure you were sitting on it for quite some time. What's the community reaction been, the general reaction been? How are you feeling?
Yeah, really good overall. I mean, there's so much, I wouldn't say it's just about fundraising news. In general, if we are like working on something really cool and I'm just like keen to get out there, I know people find it fun or interesting, then it's always, it's actually hard to sit on that kind of news, right? I'm like always impatient. I just want to like land it and see people enjoy it and then like on to the next. So glad to get it kind of out. And yeah, of course it's like, you know, it's just another milestone, right, in the journey. So it's very much still the beginning of things.
I like that. I like that mentality in general. I think one of the things that happens in this space sometimes, particularly maybe sometimes in the bigger raises, is people act like the raise is the celebration. The raise is the celebration moment. It's like, okay, we've achieved something because we've secured the funds. But as you say, like this is the start of a much bigger project, which we're gonna hear about now. So why don't we start? Go on, Dith.
Yeah, as a younger founder, I felt that like a decade ago, just over a decade ago, when I raised my first venture round for like a Web2 startup. There's like an ego-driven sort of motivation. Like you want to raise a lot of money and then hire a big ass team, and you think those things are important. And then when you grow up and you've built a few businesses, you like realize like those things aren't important. You need like sound business fundamentals. You need to try to achieve some like product market fit. You need like sustainability in how you approach the market. And again, like the more your headcount doesn't mean like the greater your chances of success. In fact, I find companies become harder to run in a good way the bigger they become. So we kind of stay playing on easy mode while we stay really small.
I like it. And I think one of the things I want to do in this conversation is go down both of those angles, one down the product route, and you talked about product market fit, and then also the operational side, like how have you managed to achieve some of these numbers? So I think people will be really curious on both of those angles. But before we get there, just tell us generally, for the people who might be a bit less familiar, about Gigaverse. What is Gigaverse, and your story of going from former Stripe employee, which I think people do know, and maybe doing some Web2 startups, to then, you know, getting to this point now where you're building this crypto game.
Yeah, definitely. So in a nutshell, Gigaverse is a crypto game. It started off as this very sort of nostalgic RPG where you spawn in a dungeon and you have to figure out what to do. And there's like very simple gameplay modes. And, you know, we're building for an on-chain native audience. So yeah, the game is like, it looks good and buttons feel like crunchy and the rest, but there's just tons of like risk reward mechanics, right? Where you have to make a decision of like, hey, what's the payoff going to be? And will I make this trade, or should I consume this potion, or should I drink from the like tainted fountain? And it's just constantly giving, this audience the kind of decision-making process that they want. But what we communicated a few months after the launch is that like actually what we want to build towards is this like really big, expansive social MMO. And yesterday, alongside the fundraising announcement, we actually revealed the open world. We showed our first sort of visual teaser of that, and that's what we've been quietly working on for the last couple of months. So we're almost there, and that ties into this egg mint that we're doing right now. But taking a step back, I mean, I've kind of always been a startup founder. I caught the bug early when I was 21. I was still in university. I launched my first startup then, and there was a very specific day where I went from like zero, like it was like one of those rough ass days where it came off a flight like 9 a.m. I went through like eight or 9 hours of like back-to-back meetings, getting rejected. And then at the very end of the day at like 6 p.m., I ended up in a boardroom pitching to the C-suite of the largest electronics retailer in the Middle East. And that ended up being the first deal that I signed. And so by, I was like up till 2 a.m. that following night, like preparing like a partnership agreement, which I had no idea what that should even look like, but I had to like Google it and figure it out and like ask my dad for help and all this shit. And that was basically like the genesis point at which I was like, all right, I'm going to have to do this startup thing. It's just way too much fun feeling that like the lows and the highs. So I've been doing startups ever since. During the course of COVID, when COVID kicked in, I had just actually exited one of the startups that I'd built, a venture funded startup, and I was trying to figure out what I wanted to do next. And there wasn't actually an idea at the time I was super passionate about. So I was like, well, let me use the opportunity to join like a really big company that I can learn from what like late growth stage looks like from the inside. And top of the list was Stripe. And just like every other noob, I did like a cold application. I didn't know anyone there at the time, but it worked out. And I ended up leading a go-to-market team at Stripe for a couple of years. Ironically, at Stripe, I got pulled on crypto because I understood how payment flows actually work and where fees are being taken and where the unnecessary sort of middlemen and interdependencies are. And I actually got pilled on crypto at the actual tech level. And so that started the clock for me to like make the move into crypto full time. That ended up happening when I joined another on-chain game studio called Proof of Play. And I spent a couple of years there leading go-to-market, and that was a ton of fun, working on a game called Pirate Nation. And then it was earlier this year, back in February, when we launched Gigaverse, and the first month went extremely well, that my co-founder and I were like, hey, we got to do this. We got to like put our full balls in here. So we both quit our jobs, and we've been focusing on Gigaverse ever since.
Love it, man. That's an amazing story. I'm glad we get to share that full story holistically with the audience. One thing I noticed, I think, we've known each other for a little bit as well. And in the story at different points, it sounds like you guys deep connection to crypto itself, like on a philosophical level. And you said specifically building a crypto game. There's like crypto native aspects to it. So first, is that fair to say? Like you find the crypto native behaviors, crypto native values important? And if so, why is that so important to you? And how do you view crypto's development since you've been in your days in Stripe?
Yeah. I really try to break this down like piece by piece. Why do I love NFTs so much? Well, as a young kid, when I was 6 years old, this was how my parents gave me my sort of like first taste of entrepreneurship, right? I enjoyed drawing stuff. So they would encourage me to like draw pictures and paintings. And then when their friends would come over for like a dinner party, I would like line up all my paintings there, maybe like 10 of them, and I'd put price tags on them, 2 quid, 5 quid, whatever. People buy them. And I also loved collecting like action figures as a kid. So for me, that's, I think, that the deep rooted link to NFTs. And then as I was a teenager, like most teenagers, sort of like anti-system and anti sort of like government type sort of mentality, right? I was all about that sort of like rage against the machine mentality. And so that's another element of crypto, which is that it's kind of just like anti-establishment, going up against this like kind of rotten incumbent system. And we have an opportunity to like do it again, but better. And then finally, crypto ended up being the bridge for me into gaming. Like I'd grown up as a gamer and always wanted to work in the gaming industry, but realistically didn't have any way of getting in. But crypto ended up being the bridge. So I put all of these things together, and then, okay, there's a final piece, which is that like others, I like to participate in the space, and I'm not like the biggest DJ I know, but I'm trading like every other day. even if it's something small, or even because it's like, oh fuck it, it's like I've got the itch, I need to mint something. So I feel that too, and it's, you know, crypto in of itself as an MMO to me. So I put all these things together, and that's why I love this space so much. And I would much rather be building like a crypto game than like a traditional game.
And what would you say makes, maybe like two questions on that, like what makes crypto games different from traditional games as the first one, and then I'll follow up with my second one, which is pretty similar.
The first is like who you're building for and the motivation of that user. So like an on-chain native, you know, for most people here, if we're being really honest, sure, like people find value in, hey, you can make friends and there's like funny stories. And sometimes, honestly, I have great memories even from the times I was getting rugged. So, you know, so you can have a lot of fun just participating in the space. But if, you know, if you ask most people, like, what's your primary motivation? It's like they're profit seeking. They're like ROI driven. And then probably fair to say for most people, the secondary motivations is kind of clout. People like to build a presence. People like to be early and right. Some people are kind of like trying to build their social influence, and they're fucking yapping all day or whatever. Which is very, very different than like the set of motivations for like the mass market gamers, right? The 3 billion casual gamers out there who predominantly seeking entertainment value. Like they just kind of like want to numb their minds. They just want to like have fun, play a game with friends, hang out, socialize. And then there's some areas of overlap, right? Like we see real money gaming. We see some games where there's like, yeah, the Diablo auction house, Counter-Strike skins, and so on. So this is growing area of overlap where the motivations conflate, but you know, you can see it like a distribution curve in terms of, yeah, I mean, there's clear different sort of audience personas that you build for if you're building like a crypto game versus like a trad game. And then, well, you know, what that means on the product side is like the way the product is built actually has to cater to that motivation, which is why like from the very early days of Gigaverse, we thought about the trading economy and having an in-game marketplace being super important, because like the trading metagame is just like a really important part of the game for this audience. So yeah, it just comes back to this like this Y Combinator thing, right? Like build what people want, and so you just have to understand these people to begin with.
Yeah, I love it how you described those different gaming audiences in both Web 2 and Web 3. And you also said you want to break out of the Web 3 bubble. How do you plan to do that?
So I mean, this is kind of why, even though we kind of like lean into Gigaverse being this next gen game where we allow automation, we allow AI agents. We'll speak a little bit more about that. But even though we're like happy for people not to play the game, the paradox is the game actually still has to be really good, right? For us to have a chance long term of kind of breaking out of this Web3 bubble. And so it means like the game has to have real entertainment value. You know, as we just said, these gamers outside of this bubble, that's what they look for. They look for entertainment, not necessarily for financial gain, or not like, you know, in air quotes, to be early to something. So the game has to be real, it has to be fun. Ideally, you have like some social features and things like that, so that you get some free growth and you aren't stuck paying for expensive Facebook ads. And then like in terms of like specific steps and tactics, like we'll have to move away from browser. Browser, it makes sense for like, again, our current audience today, the sort of on-chain natives. This is where they interact with most of their other apps, right? You're talking about Pump Fun and Hyperliquid, and so we're all in the browser all the time anyway. But if you look at where the 3 billion global gamers spend their time, it's not playing browser games. Less than 1% of their play time is spent in browser. Lion's share is on mobile. So eventually, for us to reach these audiences, the Gigaverse IP will have to grow into kind of, you know, probably like an ecosystem of apps and mini games. And this could include very simple things embedded like a Telegram mini game, or it could be like full-fledged native mobile apps. And when we design game features within Gigaverse today, we're already thinking about that in terms of like, hey, does this have potential in the future to be like a standalone game? Good example of that being fishing. It's a closed loop right now at the moment, and you know, later we'll connect it to more loops in the game. But at the same time, like the data is suggestive that people are willing to play that game mode. They're willing to fish simply because they kind of enjoy it. And as a closed loop, it would work as its own, like that could be a mobile game of its own. anyway, I think the final thing to say is like we don't intend on doing this soon. It's been the death of many games that try to cater to too many different audiences too soon. You have to be like laser focused, especially at this very early stage. And this will be done in a very like intentional manner later down the line.
Amazing. Yeah, sounds like you're doing super well as things stand. Digging into some of the numbers now and the business side, in the latest raise announcement, you had some really, really impressive numbers here. We've got 75,000 plus paying players. And I know you made that like kind of quirky requirement to play, right? By making sure that people paid to play rather than having these kind of inflated numbers that happen so often in Web3 and crypto. So you have 75,000 plus paying players, $4.5 million in revenue, $9 million in peer-to-peer trading in just the first 6 months. What's the secret?
So maybe a few things. The sign up fee at launch. Yeah, so it's funny. Like you see a lot of kind of Web3 games, crypto games take the free to play approach, but fundamentally doesn't really make sense for this space because it means people come in at zero cost entry and it's not a massive market. If you're building a game like on Steam for entertainment value that can reach like 10 million, players, sure, go free to play and then you can upsell stuff in the game. So it's a very opinionated bet that we made. Like, hey, we're basically going to charge, like most indie game devs do. You see some amazing indie games on Steam that, you go to buy for like $5, $10, $20. So we're thinking of those kind of price points. Let's charge, and then, a couple other things happening there as well. Having bootstrapped the business at launch, we were like, hey, we need to like feed ourselves. So it's like a very simple monetization model. It's in line what we're seeing with like other indie developers do. And then finally, it's about the Sybil piece. We allow people to play with multiple accounts. Like it's actually impossible to stop that anyway. So you're better off like leaning in, allowing it, and as I say, taking this like next generation approach where you actually think about the role that AI agents can play in the game economy. And importantly, like having the install fee, this pay to enter means like all these accounts have some skin in the game, and we kind of set like a floor for their entry. So they're not riding on a completely cost-free basis. And we also, break the sort of like that first seal of them being willing to like actually put some cash into the game ecosystem. And I think that increases the likelihood of people like buying skins in the game, for example, right? Because it's like, it's not they're not figuring out if they want to spend any money for the first time later down the line. Their entire interaction with our ecosystem from the very first point has been defined by this like, okay, I got to pay to participate. So, in hindsight, we didn't know all of this when we launched. It was literally just we need to feed ourselves. And this is probably like a good left curve way of stopping some like excessive Sybil activity. But as time has gone on, we've really, really drinking our own Kool-Aid there. And we think it's been the right approach for us. And so, about the figures overall, of course, that's not solely from sign-up fees. We have a bunch of different revenue streams at this point. We're definitely like revenue maxis. And not just because it's like the meta. I mean, like you guys love Hyperliquid, love Pump Fun and others. But really from us, it was we were born in the revenue, molded by it, because we had to be. Like it was literally we got to feed ourselves. Like what else are we gonna do? So what do we have now? We have the sign-up fee. We have Gigajuice, which is like an in-game consumable, sort of like a VIP subscription. But we thought that's not fun at all. So we kind of packaged it up in a way that suits our world. We have royalties from game item trading. We have royalties from like NFTs being traded. We do primary in-game sales like cosmetics, sell welcome packs and things like that. There's a small fee taken when people export items to sell on other marketplaces. And we're just going to always be adding more. We want someone like, if you come into the game, you just pay your install fee, like, sure, you can probably get by without spending again. But we want to create like good reasons and avenues and like enough enough depth in the ecosystem and the game economy to encourage more spending. And yeah, so things like the marketplace, which is kind of a mini game in of itself. As we design more and more of the game, there'll be like more reasons why people will want to trade, and that will be good for them. There's like arbitrage opportunities for them if people are seeking ROI, but it's also good for us because that's how we take a fee there as well.
For sure. Sounds like the revenue meta is a good, well, it's not just a meta. I think that's one of the conclusions we've all been coming to as well.
It's the irony of the whole thing.
Exactly. A lot of interesting learnings though, maybe from a founder perspective here, then looking at one of the other numbers, $1 million in annual revenue per employee. For the other founders out there, and given that you've also participated in a bunch of startups, what would you advise to achieve this?
Well, we're only here because we monetize day one. And when I speak to many other founders, they're just kind of scared. It's very like, the more intelligent you are, the more prone you are to like imposter syndrome, right? Self-doubt, self-FUD. Like I can only imagine for you guys starting the show, same sort of thing, right? Like you have to put yourself out there. There's not many like viewers to start, and the validation only comes later. So as founders, we're great at like self-doubt and self-fudding. And so I speak to founders all the goddamn time who are like, no, we don't want to charge. We don't want to add friction. No, charge. It's a forcing function to make the product better, right? And it's also a self-fulfilling prophecy. If you're very insecure and unconfident in what you're doing, then the market senses that and then won't pay. So you have to go full balls in. It's the only way. You have to have that delusional level of self-belief in what you're doing and just be brave enough to give it a go. You can always pivot and iterate if need be, but like monetize early, I think is number one. And then I think the counterpoint though is like, don't be greedy. Don't overdo it. You have to create space for the community to eat and capture value as well and have an arbitrage. And so like you always got to be paying attention to like the appreciation and depreciation of assets in your ecosystem and like navigate that ebb and flow. I think we walked the line pretty well ourselves. We could probably do a bit better. Another thing is be really frugal, which is about saving money, actually, not necessarily making like $1 million per employee. But here's the thing about it, right? Like frugality is one of these, say one of Amazon's, they have like 12 or 13 like leadership principles. And there aren't really many better cases out there of a sustained hypergrowth company over like the last 3 decades than Amazon. But again, when you don't spend on dumb shit, even in a bull market, it's like, again, a great forcing function for you to be very resourceful. You say focus on like finding like an early level of product market fit, telling a compelling story, just like forces you to build the business in the right way. And then the last piece I think is, especially for gaming founders, yeah, if you're building in crypto, you have to lean into this audience. Like we do see some great game builders come to crypto and to Web3, but kind of like force a fit of basically what's like a Web2 game onto this audience. But the first thing that this audience is going to ask is like, oh, well, how can I make money? And if there's no answer there, then guess what? They're probably not going to play your game. I wouldn't. Like for fun, I'm off playing like PUBG and like Battlefield. You know, that's the level that you're competing with in like Web2 games. So you either have to be like so fucking good to build a game that doesn't have like an ROI loop, or if you're building for a crypto audience, like build what people want. And then yeah, you have a much better chance of actually being able to monetize.
I love how passionate you are about the gaming side of things, and at the same time you're like super pragmatic as a founder. Really think that's a pretty dope combination. But I want to keep it moving because we only have a couple minutes left in the show, and I want to go to the raise. You did announce a $2 million raise led by One Confirmation. What's the story about how you secured them as a lead investor, and why are they so important to you?
Yeah, so it's funny, like so we started Gigaverse completely bootstrapped. We launched the game, response was really good. It was all around just like a crazy time. As I say, like my co-founder and I, we decided to quit day jobs that we we enjoyed those day jobs. They were good, but we both quit at the same time, 3 or 4 weeks after the launch of Gigaverse. I mean, for me as well, it was just like all around like a crazy period in my life. I lost my dad like a week after we launched the game, and it just set me personally. I was on a bit of a warpath of like, well, fuck this. I'm going to make sure like we win. Like primal instincts sort of time in my life. So I mean, at that point, we're just like focused on like shipping fast, listening to the community, kind of develop this like signature style of ours, no roadmap, just ship cool things unexpectedly. And by our second month, we were, people could see some of our numbers. I think we already generated our first million. And so going into our third month, a couple of funds actually started reaching out to us. That prompted Garnish, my co-founder, and I to just basically like, hey, should we raise? And if so, from who? I ended up then meeting something like probably about 15 funds or so, majority of which were, what we'd call like a follow fund, meaning like they want to participate in the funding round, but they can't initiate it. They need someone else. They need like another firm, like what's called a lead, to actually like set the terms and agree the valuation and the rest. Anyway, those conversations were all good. Like I would say probably in like 70% of cases, the fund were like, yep, this is great. We're in. Let us know when you have your lead and we want to hop in here. So then the next step, we just met like a few potential leads. Conversations were like going well. We're in the middle of like the due diligence process with them. But at that point, Garnish and I, we were like, hey, do we even want to raise? Like our revenue has doubled. It's on its way to like tripling. And yeah, as you kind of alluded to, like most people think fundraisers are like really bullish, but if you ask experienced founders, they'll tell you like it's got like trade-offs just like anything else, right? It's not all pros. There's some cons, like you're selling part of your company in the end. And we were just in this really fortunate spot of like not needing the money. Anyway, just to wrap. So then we met One Confirmation. It was kind of at this point that they actually reached out to us, literally just like a casual Twitter DM from Brett Shear, who's one of the general partners there. He's a gamer, he's interested in on-chain games, looking at the space. We set up a call. I didn't even tell him that we were raising or kind of been considering it, but we had a great conversation about how we were growing the company and our plans for the game, like the opportunities we were going for. And so naturally, then we started talking about the raise, and then we met like the other partners at the fund. And I think what's really cool about One Confirmation is like they didn't care that we had other offers or were like expecting term sheets from other leads. That's why they're a true lead in my eyes. Like they independently build their own conviction in an opportunity and in a team, and then they decide if they want to deploy or not without like waiting for anyone else's signal. And they also move really, really fast. So I see them very similar to the Gigaverse team in that respect, and like vibes were on point as well, which is important. And yeah, I mean, the final piece there, which was interesting, is by the time we agreed to do the deal, we probably had in totality about 5 or 6 million confirmed like commitments to the round, but our cash flow is extremely good, and we decided to take on less cash here. We didn't want to raise excess capital at this stage, which we can't use anyway, and we can always raise more again later when we're like further along, like we're on to like the second phase of the story. So yeah, I mean, they're an awesome fund. We've had a great experience and recommend them to other founders.
Love that story, makes a ton of sense. And what I also love is the tagline that One Confirmation has on their X bio, which is skin in the game or shut the fuck up. And talking about a skin in the game, and you just mentioned potential further races. How do you think about your community participating in the upside of Gigaverse? Are you thinking about a community round in future races? Is it rewarding in-game activity? Where is your head at with that?
Yeah, well, we've kind of already been doing this because from the very outset, we've had a set of like ecosystem assets that people can collect. We've got the Genesis PFPs, the Good Luck Have Funners, we've got the Gigaverse ROMs. And so you can kind of see it in that way, right? That's the community participation side. It's just not it's not packaged up as like, a very obvious like the pump ICO or something, right? Which is very on the nose. So when the community like collects the assets they spend in the game, they're like kind of an active participant in the ecosystem. I think that's how we look at that. And it's not so much about, hey, having them pile into like a VC style funding round, because I mean, it's not feasible in any case. And, it's still too early for us to talk about. We haven't said anything about, for example, if we would do a token. So yeah, I mean, the way that we would encourage the community to get involved is like, hey, there's like very obviously these assets that you can collect, and there's this game that you can play and spend in, and that's how they should think about that.
Makes a lot of sense. Dith, as we kind of round off here, just looking forward into the future, what are you looking forward to most? And is there anything else that we've missed that you'd like to share before we close out?
Yeah, I mean, we spent the last 2 months getting a lot of features close to like 70, 80% done. And we would tease the feature like this rom nom nom feature, or this like gacha coin. There's like gacha coins, but the machine is not live yet. So we actually have like a lot of like finality to deploy. Like now the feature is live and you can use it. And these are all going to be really fun because they introduce like new game modes, new like parts, new ways that you've like experienced risk and reward, new decisions. There'll be like new things to trade. And then of course the big one is the opening of we'll finish this egg mint that's currently ongoing for like the next 6 days. And then after that, the eggs become, when they become hatchable, they'll become tradable. And then we'll open up the open world where people can actually use these mounts. So I'm just excited for like the game to continue evolving and for people to see the cool shit we've been working on. I still think it's like extremely early in the overall context of the game we're going to build. People are only seeing like really what's on the surface right now.
Indeed. Okay. Very, very exciting stuff, Dith. Thanks so much for joining us. It's been a really insightful conversation. For the people who are watching in and want to follow along on Dith and Gigaverse's journey, Dith's Twitter account is at 0xDith. And the Gigaverse Twitter account is at PlayGigaverse, both that I just shared on screen for you to follow along in the rest of the journey. Dith, it's been an absolute pleasure. Thanks so much for joining us, man.
Same here, gents.
We wish you all the best.
Appreciate you, boys. Take care.
Take care. Just a reminder, guys, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video. And you can catch us on Spotify and Apple Podcasts too, if that's how you prefer to catch up. We'll see you again tomorrow, same time, same place, 7 a.m. Eastern time, live for 1 hour. Have a wonderful day. Thanks for joining us. See you tomorrow. Bye-bye.